But this is why when you buy out a business, you want to make sure you're doing your due diligence across the board, because guess what? Someone else's previous problem is now your current responsibility. Why should I give you, sir or ma'am, why should I give you a $250,000 loan if you've only shown me that you can be responsible for just 6 months, and then you go ghost? So I'm gonna name 3 reasons why business owners stay stuck. You're mixing your personal with your business credit. And the biggest expense in life is what someone doesn't know. So when they go into something oblivious to, oh, well, I know business credit can do this, do this, do this. But if they don't know the intricate details on how it can truly benefit them in their business, they're not going to take action. Say that one more time for the people in the back. Why banks keep saying no to your business. What's going on, Bag family? Coach Darius Dee Brown here, and we're back with another episode 57 to be exact. And we're going to get right into it, man. If you're new to our channel, make sure you like, subscribe, share with someone that you know that can benefit from this value in real time, because we're going to continue to provide real value in real time, because this is keeping it real with the Browns. So we appreciate all the love. We appreciate the shares. We appreciate the engagement and the subscribers, new subscribers. Just make sure you guys continue to stay tapped in each and every week, because each and every week we are dedicated to giving you this value. All right. So without further ado, you guys see it. Why banks keep saying no to your business. Say that one more time for the people in the back. Why banks keep saying no to your business. I've been working on this project where I've been really tapping in with my followers, with our supporters, through social media, just asking questions, whether you're a small business owner, an entrepreneur, if you're in real estate, whatever industry you're in. And I'm just wanting to get different people's perspectives on business credit, how they view business credit. Do they truly understand business credit and how it can truly help them break down financial barriers? And I've been getting a lot of the same responses, right? The responses that I've been receiving is quite profound, and I appreciate everyone for tapping in and giving me their perspectives. But it's, you don't know what you don't know. And the biggest expense in life is what someone doesn't know. So when they go into something oblivious to, oh, well, I know business credit can do this, do this, do this. But if they don't know the intricate details on how it can truly benefit them in their business, they're not going to take action. It's just that simple. Because a lot of times we regurgitate, a lot of us that are in this industry of credit, whether it's credit education, credit repair, whether you're in the fintech space, which is the financial education piece, systematic space, we have to be very intentional, right, as experts in our respective fields, to truly educate, to help people truly understand how it can benefit one, right? But if we're just throwing out, you need to fix your credit, or you need to start building up your business credit. Well, Coach Dee Brown, why do I need to build my business credit? What does that look like? What does that entail? Like, how can it truly take my business to the next level, right? So if your business credit score is a mystery to you, that's exactly why the banks keep saying no. I'm going to say that one more time for the people in the back. If your business credit is a mystery to you, that is exactly why the banks keep saying no. You don't have a funding problem. You have a positioning problem. I'm going to show you the difference. We're going to break this down step by step. All right. Most entrepreneurs are one business credit profile away from the capital they've been begging for. Just one business credit profile away. But there's this positioning, this foundational positioning problem that you're facing right now, because you're going into it, again, oblivious. You're going into it not knowing, right? So again, we talked about it a couple of episodes ago. Your personal credit opens up the door, but your business credit gives you unlimited options. It gives you unlimited options, financial options, where you're able to not only break down those financial barriers, but you're able to build those profound relationships. It's all about building the relationship, ensuring that you are doing your due diligence to continuing to establish that credibility across the board when it comes to your personal as well as your business credit. If you are a business owner and you're putting your business credit on the back burner, you do not want to be a business owner. You're doing it for a hobby. You're not doing it to be a true business owner, because any real business owner understands in this country that we are currently, the soil, the U.S. soil that we're currently on, we understand that this country is run off two C's: capitalism and credit. So if you are a true business owner, you understand that. You're opening up your paradigm right now. You're expanding it abroad, and you're saying, wait a minute, I'm a business owner. I make X amount of dollars. Why am I spinning the wheels if I'm looking to unlock the next level of my life or my business? If you're wanting to do that, or if you're willing to do that, then you understand building business credit is essential in the season that you're in for taking your business to the next level. Right now, you need to understand that your personal credit can be amazing. That's awesome. But we have to break down why the business credit hasn't been established. And I get it. You don't know what you don't know. So that's what we're here to do. We're here to open up the curtain. We're here to open up the frame, pull back that curtain so you could be like, wait a minute, I need to start building my business credit. I need to start getting things in motion. I need to start getting things structured, right? And I think this is another thing. Like, I've been getting people to reach out and say, hey, man, I got to get out of my own way. I got to stop operating in fear. I've been running a business for 15 years and I still haven't started to establish business credit. And I know I need to. And I know you guys, that's what you do, but you're not leveraging those resources for whatever reason, right? So I want to encourage that entrepreneur, that business owner. If you have the resources, it doesn't have to be Brown Assets Group. It can be us, someone else that you know that's in your ecosystem, and you know they've been doing this for a while and they have proven results and a proven strategy and realistic roadmaps to help you reach your goal. Why not reach out? Why not ask questions? Why not say, hey, listen, man, this is my objectives. This is what I'm looking to initiate within my business. Hey, man, listen, can I, pick your brain for a couple of minutes? That's it, but unfortunately, a lot of us are not willing to leverage those resources. So in this season, you want to make sure you leverage those resources. All right. So why stuck? We're gonna say stuck, right? Because a lot of entrepreneurs right now, they are stuck right now, right? Stuck is the symptom. It's not the actual problem, right? You being stuck, whether it's, man, listen, man, I'm spinning the wheels right now. I just took out a couple of MCA loans and I'm spinning the wheels and I'm making enough income within my business, but I'm having to pay X amount of dollars back, which is about 80% of my total monthly revenue that I'm paying back towards this MCA loan. I'm just going to use MCA loan as an example, right? Because there's a lot of entrepreneurs, they're not able to take the traditional banking route because several reasons, whether you only been in business for a couple of months or maybe up to a year, maybe your daily average balance is not where it should be. You have more output than input, which means you have more out income than income, right? Does that make sense? Or outcome more than income. More money is going out than staying in. And lenders want to see the opposite. They want to see more money coming in and staying in, right? So you have to understand the landscape of your business, right? Like for us, we don't have a lot of overhead, right? Because we are a service-based business, right? So whether it's office supplies, getting things for events when we're hosting events, our CRM systems, things of that nature, that's all we have. But if you have that business that's running their business out of a brick and mortar, they're having to spend more money on products as well as services, as well as systems, their overhead is going to be much higher. So you want to start thinking long term. It's all about sustainability. Why wouldn't I not build my business credit to have that leverage opposed to spinning the wheels and I'm just dishing out money, right? So this is where those vendor accounts come in, right? This is where strategy comes in, right? Strategy is the method, okay? So stuck is the symptom. It's not the actual problem. Being stuck is not the problem. Is not the problem. All right. I'm gonna share a story with you guys. I had a client. This was back probably about 3 years ago. He was from Nigeria, actually originally from Nigeria, right? But he's in the logistics space, based here in Atlanta, right? And one of our business counterparts referred him to us because he was making a substantial amount of income. He was making around $300,000 to $350,000 a month in income, right? And I'm looking at it on paper. I'm like, oh, well, he's looking to take out maybe like a $2 million loan. Cool, no problem. We can assist him. I'm only looking at it from a surface standpoint, right? Until we really start, once we submitted his application, he told me what he was looking to accomplish. He was looking to take his business to the next level. I said, okay, cool. I'm going to connect you with a couple of our lenders. Once we submit over the application, we should be good. I started talking to the lenders and they were like, oh, we have a problem here. I was like, what's the problem? Well, what happened is he actually purchased the business from someone else. Right? So he bought out the business from someone else. But the original owner of the business, the owner that was the sole proprietor of the business, they were doing some shady stuff. Right? And he didn't know it. He didn't go through the proper due diligence period before acquiring the business. Right? So once he decided, like, listen, man, I'm making enough income, but I know I'm spinning the wheels right now. I want to take my business to the next level. And I know I have to start building my business credit. His personal credit was like high 700. So we didn't have an issue there. But when the lenders start looking at these intricate things on his profile and they saw that the original owner was taking out loans, not paying them back, there was a default where certain lenders were blacklisting his business and he had no idea. Again, this guy's from Nigeria. This guy's only been in the States for like 10 years, right? So he's still learning. He's still trying to figure it out, right? And again, by the grace of God, I'm glad that we crossed paths and our business counterpart introduced us to him, because through the interim, we were able to educate him. He did not get the loan because the lenders that we connected him with, our partners, they were not willing to do that. They were like, we understand he makes a substantial amount of income per month, right? We understand that his personal credit is substantial, but there's other things that the lenders are taking in account. And unfortunately, a lot of people don't know that. They just think, well, my personal credit is good. My income is good. His daily average balance was good, right? He had a couple of things on the personal credit, even though his credit was like high 700s. He had some things that we had to dispute to get removed, because again, the lenders want to see a clear profile across the board. They don't want to see any derogatory remarks. They don't want to see any delinquent accounts. They don't want to see any high utilization percentages. They don't want to see that, right? You want to ensure, right, that everything is solid across the board. So we were able to take care of that for him. And in the interim, we're in correspondence with the lenders. Hey, listen, man, what can we do for our client to ensure he's able to secure this loan? Unfortunately, they were not able to give it to him because of that. We were this close. Once it got to the underwriters, he got pre-approved for around $2 million. Once we got to the underwriters, they saw that default on a previous loan that he wasn't even responsible for, because he hadn't even acquired for the business. He hadn't even taken over the business yet. But this is why when you buy out a business, you want to make sure you're doing your due diligence across the board, because guess what? Someone else's previous problem is now your current responsibility. And that's what happened in his case. And I wanted to share that story because a lot of times, us as entrepreneurs, we have these goals, we have these innovative ideas. This guy, he's in logistics. He's making $350,000. He's making 8 figures a year. Like he's surpassing that, right? He's surpassing that 10 figures a year. Like he's there. But he knows, like, in order for me to get to the next level, I know that I have to start leveraging my business credit. I know I have to start building my business credit because there's no way with him, with being in logistics and importing different supplies and goods from the US back to his country. He knows, like, listen, I have goals for my business as well as personal goals, right? I have aspirations. I have things that I'm looking to accomplish. And I know that I'm not able to accomplish those things by spinning the wheels, by just leveraging the monthly revenue that I'm getting because my overhead is way too high. So we need to identify what your overhead looks like. If your overhead supersedes your actual income, you got to understand, as an entrepreneur, we pay ourselves less than what we pay our business. If you have employees, right, depending on how many employees you have, right, you got to take all of this into an account, right? So like with Brown Assets Group, we don't have a lot of overhead, right? We have a 4-man team, and that's including me and my wife, right? And then overhead is we're down. And then we may hire contractors here and subcontractors here and there, like freelancers, when it comes to marketing and things of that nature. But how can I reduce my overhead as much as possible so I can bring the income and keep it there? So when it's time for me to take out a loan, I want them to see, again, documentation beats conversation. So I want the lenders to say, okay, listen, their daily average balance is substantial. Their personal credit is substantial. Their business credit is substantial. They haven't defaulted. 0 NSFs across the board, right? They're looking at this for the past 12 months, depending on the amount of loan that you're looking to take out, right? This matters, people, right? So a lot of times I had a gentleman, he was, basically saying that, he understands the EIN LLC. He understands the formation setup, but he's like, it's a bit frustrating because with the vendor accounts, it's like a waste of time. And I'm like, no, it's not. It's about consistency. It's about establishing credibility. Why should I give you, sir or ma'am, why should I give you a $250,000 loan if you've only shown me that you can be responsible for just 6 months? And then you go ghost. You stop because the impatience. We got to understand, people, if you're building something with that's sustainable, longevity, long term, you got to put some skin in the game, right? You got to put some skin in the game. So I'm going to name 3 reasons why business owners stay stuck. You're mixing your personal with your business credit. You're commingling is what our CPA calls it. No commingling. The IRS, they don't want to see that. If you're mixing personal and business, that's a complete no-no. You have no established trade lines, right? You're being reactive. There's no strategy, right? When it comes to funding applications, you have to understand you got to be strategic across the board. All right. This is how we're going to diagnose this blocker of being from going from stuck to unstuck. Right. You got to walk through the funding readiness checklist. We're going to walk through it. All right. You need to make sure the EIN is active, right, and up to date. Right. The business bank account. You got to make sure you are feeding that bank account. Right? Whether your business bank account is tied or integrated with your payroll, whether you're using QuickBooks, whatever systems you're using to pay yourself out, but that business bank account needs to be getting fed, whether it's if you pay yourself weekly, bi-weekly, or monthly, that business checking account needs to be getting, actually, it's a business checking account. So all the money should be flowing in there. Boom. It should be funneling through that account. All right. You need to make sure you have your Dun and Bradstreet number active, and not just the number, people. You're not just creating the number and that's it. That's free. You need to actually go in and establish and create your profile. Make sense? Your profile, depending on the industry that you're in, your profile needs to make sense, because when they send it off, we're reporting this every single month. So it got to make sense to the lenders, right? You need to have a matching business address, phone number, and email structure. No using your Gmail account when you are a business owner. You need to have a professional email address. You need to have a landline. Oh, Coach D, why would I need that if I run my business from home? That's cool. We run our business from home as well. But it's a safety measure, right? I'm not going to you look up Brown Assets Group, Brown Solution Services. I don't want that to be tied to my home address. I don't want people just showing up to my home, right? So number one, a safety measure. Number two, credibility. The lenders like wanting to take you serious, you got to take yourself and your business serious. So create and set up a virtual business address. So if you don't run your business out of a brick and mortar, cool, no problem. Right? Go ahead and set up that virtual business address. It's about $14 a month. Okay? And you need to understand the difference between personal credit funding versus business credit funding. There's a key difference there. All right? When you are taking out a personal loan, of course, they're looking at the personal credit profile. They're looking at your history. But then when you're looking to take out a business loan, 9 times out of 10, that first transaction, that first loan, you're going to be your own personal guarantor, your PG, which means your personal credit needs to be solid across the board. And this is what a lot of people miss. They're like, well, I don't need. No, you definitely need it, people. You definitely need it. Now, if you're like, hey, listen, man, I'm great at where I'm at. I'm not looking to scale up. No problem. But still, okay, you may not, but if you're a business owner, your business should. You should. Okay, you might not be, but take that business, because now as a business owner, you have more options, which means when you have more options, you're able to give other people opportunity to win, whether that's hiring on someone that's looking to take on another career or looking to be a part of something dynamic, right? So you're not thinking about yourself, you're thinking about the overall business, right? The people that are tied to your business, your employees, your assistants, your contractors, your marketing team, whatever that looks like, right? You're thinking about them and their family. That's how, as a business owner, that's how I look at it. I'm looking at, look, bro, how can I position other people to win? Because when I position other people to win, I win by default. That makes sense? So, business credit opens up the floodgates. It takes the business from here to here. Again, personal credit opens up the door. Business credit gets you in the door and it makes you unstoppable. Okay? So the fundability foundation. This is the fundability foundation piece. The paperwork, the application. Lenders are looking at the structure, the overall structure of your business before they ever look at your revenue. I'm going to say that one more time for the people in the back. I told you guys the story about our previous client making between $300, $350 a month, $1,000 a month. Some people will never see that amount per month, right? And he still didn't get approved for the loan. So lenders are looking at the overall structure of your business before they ever even take a look at your income. Now, of course, you go to a little MCA. Oh, man, I'm funny. I had to throw a little, because I don't like MCA. So, yeah. So when you go get that little MCA loan, right, of course, the first thing they're looking at is your income because it's revenue-based funding. They're not looking at all the intricate details of your business profile and the structure of your business. They care about how much money your business is producing every single month. But here's the caveat to that. You're going to pay an astronomical fee to obtain that loan. They're going to give it to you quick, same day funding, whether it's $5,000 or $500,000. Best believe you're going to 5X that initial loan. You have to pay 5 times that amount, that original amount. I've seen people where they had to pay 200% over the original loan. Like, that's absurd. Clients look like, oh man, I got approved for $50,000. They're wanting me to pay like $200,000, $250,000 back. And it's because of the risk that they're taking, because they're not looking at the other stuff pertaining to your business. They're solely looking at the daily average balance. How much is your money? How much income are you keeping in your business, right? No NSFs, which means no insufficient fee. No money better be in there after every transaction. Nothing better overdraft, right? And how much money you're producing based off your frequency. All right. So here's the positioning to get you approved, right? So this is 3 tips: your net 30 accounts, net 60 accounts, net 90, net 120, etc. Right? You want to make sure you have at least 5 vendor accounts. 5 vendor accounts and 2 LOCs, line of credit, right? Whether it's Amex, your credit union, a credit card, a business credit card. And you need to handle those accounts responsibly and with strategy. If it's not pertaining to your business, again, we're not co-mingling. Everything needs to documentation beats conversation. So the lenders are going to see it. You got your accountant, your CPA. They're going to see it and they're going to hold you accountable. They're going to be like, why are we co-mingling? Right? It only makes it harder when it's time for you to apply for that loan. Right? So once you have at least 5 vendor accounts, 2 LOCs, line of credit accounts, 2 credit cards, 7 total. That's a total of 7 accounts, people, right? 7 accounts. You need to make sure you have been in business for at least 6 months, 6 to 12 months. You haven't dissolved your business. You have consistent revenue, consistent deposits, right? Consistent revenue deposits. Change what you qualify for. So if it's like this, if your revenue deposits are doing this, if it's not doing this and it's doing more of this, it's going to change what you qualify for. So we want to make sure we're producing more income. And we talked about it on a couple of episodes ago. What you need to do, or what you can do, let me rephrase that, what you can do to produce more income, more cash flow, right? So if you haven't checked out that episode, make sure you go back to episode, I believe it's 55, and I break down step by step on how you can start generating some income in your business, right? So we can get that cash flow. All right. So if this is some valuable information, guys, make sure you like, subscribe, share with someone that you know that can benefit from this value. Every single Thursday, people, at 7 p.m. Eastern Standard Time. I'm going to say that one more time for the people in the back. Every single Thursday at 7 p.m. Eastern Standard Time, myself and Coach Joe Canna, we're going to be providing you the framework, the ultimate framework on how to build or rebuild your personal credit and how to build up your business credit. This is essential, right? This is $1,000 worth of information. We're going to give it to you for free, absolutely for free. No catch, no, we're going to, here, boom, take it. right? Because again, we're firm believers. As long as we put you in position to win, you're going to always win by default. Okay. All right. This is the biggest mistake we see entrepreneurs make. Applying too early. You're trying to apply for a loan too early and you haven't set the foundation. You haven't properly structured your business, right? So you're applying too early. And then this is why a lot of business owners get discouraged. Don't apply so early. Connect with myself, with Coach Joe Canna. Connect with someone that you know that has a proven track record of truly helping people in real time. Proven real results in real time, right? So a lot of people, the biggest mistake we see entrepreneurs make is applying too early versus building their profile first the right way, then applying strategically. So we're going to give you that's where the framework comes in. The framework is giving you the step-by-step guidance. So if you reach out to us and you say, well, I know I need to, and you know this is what we do, and you still don't reach out, whose fault is that? That's not our fault. That's not Coach Dee Brown. I'm telling you in real time, if you're watching this and you know this is what we do and you still don't take action, that's not our fault. Our responsibility is giving you the information. Your responsibility is what you do with it. Make sense? So we were supposed to have Coach Joe Canna on today, but she had a couple of business meetings to attend to. So we might bring her on next week. Queen B is moving with intention, people. She out here making an impact. We love it. We love to see it in real time. She's helping a lot of people. So this is one of the reasons why you guys haven't seen that beautiful face in a minute, because she's out in the marketplace in real time while hubby, Coach Dee Brown, is providing the value to you guys online. So she's out in the marketplace. I'm here, but we're still pushing the business model forward. We're still moving the goalposts, and we're going to continue to do it every single week. This is what we were called to do. This is the mission. This is our initiative. And this is how we're able to serve our communities to gaining their buying power back in real time, because this is keeping it real with the Browns. All right. So I'm not here to give you guys a lecture or tell you what to do. I'm just here to give you real life experiences, real life conversations. Again, we give it to you. Hopefully you take it, run with it. If not, all good. It's still love. We still love you guys in real time. All right. So again, 5 vendor accounts. Right. And here's the thing. Here's what I wanted to share with you guys. Like, if you strongly feel that, you know what, I need help. Like, I want to get on a Zoom call, but I don't want to waste my time. We get it. The most valuable tool we have is our time. We don't get that back, but it's free information, right? What do you have to lose but an hour to get real-time information that can change the trajectory of your future, your business, right? An hour is not long. So we'll have the link for the description. In the description. We'll have the link in the description for the Zoom call. You know, you can take advantage of that if you choose. Again, if you're not able to make it this week, next week, every single Thursday, 7 p.m. Eastern Standard Time, same time. It's not going to change. All right. Or if you're like, you know what, I've been following them for a while. I know what I need to do. I just haven't taken action yet. Everything is clear. Everything makes sense. I want to get started. Go ahead, visit our website. We'll have the link in the description as well, where you're able to submit your application. There's no obligation. No obligation, people, right? We don't check your credit. You're not tied into anything. We're just identifying exactly where you are at. Again, documentation beats conversation. And honestly, we prefer this method opposed to you first getting on a phone call with us. And because at the end of the day, here's the thing. We're like lenders, right? Because we're creditors, essentially. We report our clients and our mentees. We report their profile. Those that are in our program, we're able to report their profile in real time, right? So if you get on the phone with us and we don't have anything that's documented where we can actually see it to review it and analyze it ourselves, we're just going off what you're telling us. So it's best for you to submit. And I get it, man. I'm going to keep it real, because there's a lot of people that say that they make this, or their credit score is this, or their business credit is this. And when it's time to submit the application, they weren't being truthful, right? Or they don't even complete the application to its entirety. So again, people, it's nothing to be embarrassed about. I'm not here to embarrass anybody or none of that. But again, we got to be truthful if we're really wanting to take our business to the next level and get the help that we really want, right? We all had to start somewhere. So don't be embarrassed, right? Be embarrassed if you don't take action and you don't do something about getting you, your business, and your family to the next level. Make sense? So the first step will be is visiting our website, submitting the application. It takes a couple of minutes to submit, right? We verify. It takes about 48 hours for our team to verify the application, right? To determine if we can be able to serve you and assist you. And if we can, you'll get an email notification that your application has been approved. Then we will jump on a phone call and we will go over your goals. We'll go over what you're looking to accomplish with your business credit and your overall business, right? And then we will give you that realistic roadmap to sharing with you how we're able to assist you. Make sense? So we'll have that link in the description below. Again, it takes a couple of minutes. There's no obligation. We don't do a credit check, so there's no hard inquiry on your credit, on your personal credit, right? We're just reviewing. We're analyzing. So if you are in a position, go ahead and submit the application. All right. So, man, where we at? Okay. See, I don't like really keeping you guys too long. It's typically 30, 45 minutes. And the reason why is because I want you guys to keep coming back every single week. We want to keep dripping on you guys. We love you guys. You're part of the bag familia. And we want to continue to provide the value, provide the information in real time. So whether you're tuning in every single week on YouTube, whether you're tuning in on our weekly Zoom calls, whether you're staying tapped in with us when we're doing these in-person workshops, whether you are tuning in with us through our social posts, we appreciate it all. Whether you are sending us a DM, just saying, man, I've been rocking with you guys for a long time. Listen, man, we appreciate all the love. We appreciate all the support. And the Bag family, we're nothing without you guys, first and foremost. All right. So again, man, you guys continue to stay tapped in. Listen, if it's to be, it's up to me. Your business deserves it. Whatever you want to accomplish. Again, we're in Q3, right? We only have a couple of months remaining in 2026. So it's not too late to take action. It's not too late to get moving. I don't care where you're at, whether you're at $2,000 a month, $500 a month, or $500,000 a month. I don't care. If you know that you're looking to take your business to new heights and new levels, but you haven't started building your business credit or you don't know what that looks like, tap in with us. All right. Until next week, we love y'all.